All right. Joining me is Matt Hougan, Chief Investment Officer at Bitwise, who's a global crypto asset manager with over $15 billion in client assets. That spans ETFs, separately managed accounts, private funds, hedge fund strategies, staking. They're really involved in everything on the crypto side. And I will tell you, Matt is always one of my favorite people to visit with because he actually started in TradFi. He was one of the OGs in the ETF space. That's where I first met him, which that was nearly 2 decades ago, believe it or not. And then now, of course, Matt is fully immersed in crypto. So I think he's the rare unicorn who is highly fluent in both TradFi and DeFi. And I would say even better than that, Matt has a unique ability to distill complex topics into a way that everyone can understand, which I think that's truly a gift. And so, Matt, welcome back to the podcast. How have you been?
Man, with that warm introduction, I'm doing great. What a great way to come in. Thank you so much for the kind words. You also a unicorn that's straddling that TradFi crypto divide quite well. So I've been well. It's great to see you. It's been fun to work together for the last 2 decades, and the next 2 decades will be even better. So I'm excited for this combo.
Well, I'm really looking forward to this as well because we are going to walk through Bitwise's 10 crypto predictions for 2026. Though I thought before we do that, we should at least briefly look back to last year because I was thinking about this, and I know a lot of this has been out there. People have talked about it. We obviously had a huge regulatory shift. We saw further institutional adoption with things like spot crypto ETFs. We, of course, got the generic listing standards from the SEC. The stable market or the stablecoin market continues to expand. But, on the other hand, Matt, the actual price action in crypto, that was somewhat challenged, shall we say, especially in the back half of the year. So before we look ahead, I'm just curious, how would you characterize crypto in 2025?
Yeah, there's an old saying about people's careers that there are years you learn and years you earn, which is to say there are years when you're sort of building as a person and then years where you monetize those. That's certainly true for many entrepreneurs where the journey is an infinite amount of work and then hopefully a payoff at the end. I think that sort of feels like what 2025 was in crypto. As you mentioned, we had these incredible fundamental advances from a regulatory perspective. We went from a really toxic environment to a really positive environment. From an institutional adoption perspective, we went from one where crypto really wasn't mainstream. It wasn't approved at any of the major wirehouses. You didn't have major endowments or sovereign wealth funds investing. To the end of the year, every wirehouse allows crypto investment. Harvard's largest liquid position is Bitcoin. We've seen multiple sovereign wealth funds come in. It's really gone mainstream in the institutional community. We also had some real growth in real world use cases. You mentioned stablecoins. They sort of came of age last year. We got the passage of the Genius Act to give them a firm regulatory framework. And we saw major Wall Street companies acknowledge and build on stablecoins and tokenization. So, from a fundamentals perspective, maybe the best year ever in crypto. That's sort of a crazy thing to say, but I don't think it's unreasonable. Certainly the best year since I've been full time in crypto, which is 8 years. This was the best year for fundamentals. But as you said, prices went down or nowhere. Bitcoin ended the year, down a little bit, but it felt worse than that because it went up to 126,000 and then came all the way back down and then some. Altcoins did even worse. The most speculative coins really got kicked in the shins and fell spectacularly. So what does that tell you? I think what happened, just to give you a 30,000 foot view, is Bitcoin ran up to $100,000, and that was a big behavioral sell wall. And a bunch of OGs decided they wanted to sell. And then that selling in Bitcoin trickled down into the rest of the market. And that's way too simple because there was a lot going on in crypto. But I think if we look back at 2025, we'll say, people had invested in crypto for 15 years. The price of Bitcoin ran from zero to $100,000, and they decided to take some chips off the table. The institutions bought those chips, but not quite enough to push us to where I thought we would have gone. They didn't buy quite enough. I think where it leaves us going into 2026 is one of the rare moments in crypto where the fundamentals are better than the price. Historically, the price is ahead of the fundamentals, like speculative froth. And right now we have the fundamentals ahead of the price. It makes it very attractive for long-term investors. But that's kind of what I think happened last year.
All right, so you're setting us up absolutely perfect to get into 2026. And so let's talk about these 10 crypto predictions that you put together. So these were put together by you and Ryan Rasmussen, right? Who's Bitwise's head of research.
That's right. Yep. Yeah.
Okay, and by the way, as we go through these here, I want to offer the usual disclaimer actually on your behalf, which is everyone, please do your own homework. These predictions are not investment advice. Matt doesn't have a crystal ball, although I would say he's pretty darn good at this stuff, but these are just predictions. They're not investment advice. And so, with that, let me actually combine your first two predictions together. And this is perfect with you just talking about the price of Bitcoin, because your first prediction is that you say Bitcoin will break the 4-year cycle and set new all time highs. And then the second prediction is that Bitcoin will actually be less volatile than NVIDIA. So you're saying all time highs, but with less volatility than one of the biggest stocks in the S&P 500. So explain yourself here.
Yeah, absolutely. So first of all, the 4-year cycle, Bitcoin's historically moved in this 4-year cycle of 3 big up years and a pullback year. The pullback years have historically been down like 60%. They were 2014, 2018, 2022. You can do the math. The next one would be 2026. So according to this 4-year cycle that a lot of crypto talks about, this should be a down year. I don't think that's going to happen. I think it's going to be an up year. The reason is we had a pretty bad 2025. And as I mentioned, the price fell when I thought it should have gone up based on fundamentals. So I think there's some catch up value. But more than that, I just think the wave of institutional capital is too big to keep this market down. We mentioned approval of Bitcoin ETFs on all 4 major wirehouses, institutional adoption, sovereign adoption. These are institutions that move money on the scales of tens of billions of dollars at a time. And I think that's just too much demand to keep the price down. We have some selling from OGs, but there's this institutional wave, this regulatory wave is too positive to move the market down. On the flip side, this volatility question, crypto's volatility has been declining over time. So actually, all I'm projecting here is that will continue. And in fact, for 2025, we were about as volatile as NVIDIA. As I look out into 2026, I actually see more risk in NVIDIA than I do in Bitcoin. I think Bitcoin is fait accompli on the big characteristics of regulatory progress, institutional adoption, continued debasement of the US dollar. I look at NVIDIA, there are questions about an AI bubble. There's rising competition in the chip space. I think there's a lot of concerns about large cap tech. I think Bitcoin's going to continue its trajectory of being lower volatility with still high prices. That makes it a very attractive asset. Higher prices, lower vol. I think it's going to create a reflexive loop where people want to buy it.
What about potentially lower interest rates? Because that's the expectation for 2026. I think often in the crypto sphere, when people hear lower interest rates, they automatically assume that's going to be a tailwind for crypto. And you can talk about Bitcoin specifically if you'd like, but how important might that be?
Yeah, it's definitely a positive factor. It's important to note that the lower interest rates are less lower than the last few times we talked about lower interest rates. Over Bitcoin's history, interest rates were on a yo-yo, right? They would like skyrocket to 4% and then crash to zero, right? The COVID pullback to zero. Now we're talking about fiddling on the edges, 25, 50, 100 basis points. But broadly speaking, lower interest rates are good for risky assets. Crypto is a risky asset despite being less risky in the past. So if we see lower interest rates, that will be positive. I actually think the bigger thing may be who is the new Fed chair. The two leaders in that, Hassett and Warsh, have slightly different views on the role of the Fed. Hassett is much more likely, in my view, to aggressively lower rates and to use the Fed's balance sheet to support the economy. Warsh is more likely to go back to sort of Greenspan era, less interference. And therefore, I think if we see a Hassett Fed, I think that's also a catalyst along with interest rates. If we see a worse Fed, maybe it's a non-event, or maybe even a slight tail, a headwind, but probably a non-event. So I think that's just as important as whether we get 25, 50, or 75 basis points, is who is in charge of this institution into the future.
You mentioned the institutional capital flowing into Bitcoin, or this institutional adoption. So I want to tie that into your third prediction here, which is that ETFs will purchase more than 100% of the new supply of Bitcoin, Ethereum, and Solana as that institutional demand accelerates. And you can certainly talk more about that specifically, but I'm curious how important you think institutional adoption is to crypto overall. Like you hit on it earlier, but offer some more context here on how important this might be.
Yeah, look, professional managers control all the money. You know that. I know that. The majority of money is not controlled by retail self-directed investors in the US or globally. It's controlled by institutions, family offices, and financial advisors, right? They control, 30, 40, 50 trillion dollars of wealth. If it becomes normal for them to have 2%, 3%, 5% crypto in their portfolios, you're talking about hundreds of billions of dollars of investment over time. That's why this is important. Uh, Crypto has been built on the backs of retail self-directed investors who are an increasing share of the market. I don't want to minimize their role, and they're important to crypto in the future. But if you see, an institution like Morgan Stanley, which controls maybe 5 to 10 trillion dollars of wealth and just filed for its own Bitcoin ETF, if they're putting 2% of that wealth into Bitcoin, that's $200 billion of flows, right? I mean, it's just the scale of it is bigger than you can imagine. Try to put $200 billion into a $2 trillion asset and see what the price does. It's going to go up substantially. So that's why this institutions matter, because they control most of the money. They're broadly starting at zero, and I think they're going to end at something like 5%. And the speed at which they get to that is really going to influence crypto, Bitcoin, but also Ethereum, Solana, and other large caps in the space.
I love the chart that you had in your write-up around these predictions, where you listed the new issuance of Bitcoin, Ethereum, and Solana since the associated spot ETFs launched in the US. And then you had purchases by those same US spot ETFs. So as an example, since spot Bitcoin ETFs first debuted, something like 363,000 Bitcoin have been mined, but US spot ETFs have bought like 711,000, which I think is and it's more for Ethereum, a little bit less for Solana. But let me ask you this. What do you say to the people who they see all of this ETF demand at the same time that crypto prices maybe experience some weakness? Because I know you see this narrative out on X. I see it all the time. It's like people almost get mad at the ETFs if they don't result in the underlying crypto price action that they expect. And so, like, how do you explain that?
Yeah, it's because other people are selling. I mean, the ETFs are absorbing the selling of OG and traditional investors, and it's just a ratio. The thing I often point people to, because of what happened last year, is actually gold. Everyone knows that gold had a tremendous year in 2025. It soared to new all-time highs. It ripped. It was the best performing asset in the world. And when people note that, they say, what drove it? It was central bank purchases. But if you actually look at the data, Nate, what you see is central bank purchases ramped after the U.S. seized Russia's assets, and they went from about 400 tons a year to 1,000 tons a year. That's a lot of gold. So in 2023, central banks bought 1,000 tons of gold. The price didn't do much. In 2024, they bought 1,000 tons of gold. The price didn't do much. In 2025, they bought 1,000 tons of gold, and gold went parabolic. And the reason it took 3 years is because of those first 2 years, there were existing holders who were willing to sell, and they were willing to sell, and miners were willing to sell, and then they ran out of gold to sell, but the demand was still there. And when that moment happened, the price went parabolic. So I think what we saw in 2025 is you had institutions playing the role in crypto that central banks did in gold. Persistent buying demand. You mentioned the statistics, buying more than 100% of the supply. And you had some existing people that were willing to sell. And maybe in Q1 or Q2 of this year, they'll continue to be willing to sell. but it's not an infinite supply. At some point, they will run out, and Bitcoin will have the same experience that gold did in 2025, which is, I think, the price will go parabolic. And to me, it's just a matter of time as long as that institutional demand persists. And I expect it to not only persist, but accelerate because you have all these platform approvals and other things happening.
Yeah, and the other thing that I would mention here, which you're well aware of from your days in ETFs, is that as important as ETFs have become, particularly in crypto, they're still only a part of the overall market. There are a lot of supply and demand factors out there. The ETFs aren't the end all be all. They get a lot of headlines. We cover them. I talk about them all the time, but that's not the only source of what's going to drive price action.
This is absolutely true. And they're a reflection of the market, right? The ETFs themselves, reflect people's demand for this asset. There are other parts of this market that matter a lot. That was true in gold too. The ETFs weren't the only source of demand. There's jewelry and bars and central bank and industrial demand. In crypto, that is true as well. I will say one thing about ETF buyers is that they've proven very sticky in Bitcoin. Bitcoin had a rough Q4 and ETF inflows didn't accelerate, but they didn't really see substantial outflows. I'll give you a preview. As you know, Bitwise does a survey of financial advisors every year. We've been doing it for 8 years, asking about their attitudes to crypto. We haven't published the 2026, but a preview stat is 99% of advisors who had Bitcoin at the start of 2025 plan to hold it or increase their allocation in 2026. So even though it was a challenging year, they're doubling down. So yes, ETFs are just a part of the market, but it's a very sticky part of the market, and it is a substantial source of demand.
Such a great stat. And I'm sure you remember when spot Bitcoin ETFs first debuted, you had some of the naysayers saying, oh, this is just exit liquidity, right? It's short-term money coming in and out. And obviously they've proven otherwise. Okay, let's get to your fourth prediction, which is that crypto equities will outperform tech equities. And by the way, I'll note that Bitwise actually offers an ETF in the space, the Bitwise Crypto Industry Innovators ETF, ticker BitQ. So again, nothing we're talking about here is investment advice. I'm going to keep saying that. But Matt, we all know how well the tech sector has done. I mean, it's been by far the best performing sector over the past several years. You're now saying or suggesting that crypto equities can outperform tech. So why is that?
Yeah, well, if you look at the underlying growth rates of these companies, they are just growing extraordinarily fast, right? Crypto as an industry is growing at something like a CAGR of 30+% a year. It's hard to find another industry in public markets that is matching that sort of CAGR. Not every year. Obviously, last year was slightly a down year, but generalized over like a 5-year time frame, it's just one of the fastest growing industries in the world. And these companies are benefiting from it. One of the reasons in particular that we're excited about 2026 for crypto equities is not only do you have the companies that are sort of surfing the wave of traditional crypto assets, the Coinbases of the world that benefit when crypto rises in general, but you have a growing number of companies that have exposure to stablecoins. And I challenge you to find anyone in the world who doesn't expect stablecoin growth to accelerate in 2026 and 2027. So as crypto increasingly interacts with the real world through stablecoins and tokenization, a lot of those benefits are going to accrue to companies like Circle, the largest US issuer of a stablecoin, like Coinbase, which is a leader in tokenization, like firms like Robinhood, which I count as a crypto equity because it's a big driver of their business, that are leaders in this space. So you just have this secular tailwind that's really, really strong around stablecoins, tokenization, and in my view, crypto in general. And I think that's going to lift the prices of these companies higher.
How do you think investors should approach investing in crypto equities versus actual crypto itself? So let's stay on the Bitwise product suite. If I'm looking at BitQ versus, say,
Yeah.
BitW, a crypto index-based ETF, what are some of the basic considerations here?
Yeah. Well, I'm like the only Jack Bogle crypto investor in the world. So my starting point is always, what is the market? If you look from a market cap weighted perspective, the public ratio is about 90% crypto assets to 10% crypto equities. My own view is that the crypto equities is underweighted because there are so many private and IPO firms coming to market that that's not the right ratio for most investors to represent the industry. I think it's more 80% crypto assets, 20% crypto equities. I think if you do that, you have something like the market portfolio. Now, investors may want to overweight one side or the other. Again, this is not investment advice, but from a starting point, like what's the S&P 500 exposure to crypto? I think it's about 80-20 crypto assets, crypto equities, and then people can pick and choose where they want to over or underweight. But that's the starting point for me.
So the answer theoretically would be both. You might want to own both of these.
Definitely both, because this is an early industry. Where will the value of stablecoins accrue? Will it accrue to Ethereum, Solana, and Tron, the primary blockchains on which those stablecoins are issued? Will it accrue to Circle, which is an issuer of stablecoins? Will it accrue to Coinbase, which offers rewards on stablecoin deposits? Will it accrue to DeFi protocols that people can use stablecoins and borrow? I don't know. Maybe you know. I don't know. It's too early. Like it's too nascent to know where all this will accrue. Will stablecoins grow? Yes. That's what I want to bet on. And if I want to bet on that, I need to own the crypto assets. I need to own the crypto equities. If only one of them works out, I think the secular growth is big enough that I'll be quite happy. But if I try to pick and choose, I think it's a mistake. I think no crypto portfolio is complete without exposure to both assets and equities. And so most investors start with that sort of combination.
I will absolutely be the first to say that I don't know. And so I'm like you, I like to put on the Jack Bogle hat, and we'll take an index-based approach here and experience the longer-term growth overall. Okay, your fifth prediction, interesting one. It's that Polymarket open interest will set a new all-time high, surpassing 2024 election levels, which everybody remembers how Polymarket really came on the scene during that time. And I'll tell you, Matt, I'm fascinated by the rise of prediction markets. We're obviously seeing more centralized ones now popping up everywhere. I'm seeing mainstream commercials on these. It feels like every time I turn on the TV. But I guess I'm curious, how do you think about the competitive dynamics in the space? And that you have Polymarket, you have some of these more centralized prediction markets, or some competitors, some decentralized competitors to Polymarket. But just how do you think about that space overall?
Yeah, great question. I think they're both going to win. So I'm bullish on the growth of Kalshi, which is probably the leading centralized provider, and Polymarket, which is the leading sort of crypto focused provider. The thing about crypto that many people overlook is it's built on a demographic that is young, uh, gambling native, and speculative. They're online. They're interested in speculation. They're used to short term wins and losses. So it's just a very attractive demographic. I think people belittle the crypto demographic, like these crazy kids out there doing whatever. Maybe that's true, but actually, they're increasingly wealthy. They grew up online. They have strong opinions. They're used to expressing them online, and they're used to wagering money on speculative bets that either pay off big or go to zero. That's native to the crypto mentality. So it's a very attractive demographic to build a prediction market on. That doesn't mean that I don't think Kalshi also appeals. It's just Polymarket is focused on a group of investors who are used to doing this and want to do this. So for me, that's a very attractive place to build your business, and I suspect Polymarket will do quite well.
A side story that I find pretty interesting here is just sort of the moral, or shall we say, ethical dilemmas around prediction markets. Like, last week with this incursion into Venezuela, somebody went out and, bet a big chunk on Polymarket. And so this creates a lot of controversy around it. My response to that, and I think I tweeted something out to this effect, at least in the decentralized prediction markets, hey, at least we now have visibility into that. Insider trading, unfortunately, I'm certainly not condoning it, but that's happened since the dawn of time
Yeah.
in traditional markets. Now we at least have visibility into it. And as you and I always say, sunlight is the best disinfectant. So I don't know if you have any thoughts on that, but that's something that I think we're going to continue to grapple with.
I think we're absolutely going to continue to grapple with, but I think you're right. I mean, I think this is net positive for the world. We should enforce against gross insider trading. Obviously there are limitations. We'll figure that out. But broadly, I think these are good for the world. I mean, I've said this before, but I think Polymarket should have won a Pulitzer for its coverage of the 2024 election. It was the only major media outlet, if you want to conceive of it that way, that correctly called the outcome of these elections. So, and called them early. So I think the information is more positive than the insider risk. But with any new technological breakthrough, we'll need to see how it matures in the market, correct the excesses, but not throw the baby out with the bathwater. And I think that's true here as well.
All right, sixth prediction. We're back to stablecoins, which we've talked a little bit about here, but um, you're essentially saying that stablecoins will be blamed for destabilizing, no pun intended there, an emerging market currency. So how do you potentially see that playing out?
Yeah, we always love to put in one or more really provocative predictions. But the thing about stablecoins is everyone talks about them in this rosy point of view, right? Particularly when you deal with emerging markets that face high inflation. Isn't it great that the people in a region like Turkey or Venezuela or Argentina or Nigeria can use stablecoins to escape the crushing inflation of their local currency? And that is objectively good from my perspective. I want people to escape the local inflation of their local currency and not to suffer from the mismanagement of their country's finances by ministers that often they didn't elect or certainly didn't endorse their financial policies. So it is, from my view, a strict good. But there is another perspective, which is if you are in charge of that country or in charge of that central bank or the finance minister in one of those regions, this is bad from your perspective. This is capital flight. This is people escaping a system and further damaging your currency. And I think the point of this prediction is stablecoins have gotten important enough and large enough, and these outflows are significant enough that I think one or more of these countries will start to care, right? Traditionally, the way they cared was sort of bank controls that limited the amount of local currency that you could exchange for US dollars at banks. Now there is this new decentralized rail through stablecoins. And I think you're going to see some currency, maybe multiple, experience 20, 25% plus declines. And the local government point the finger at stablecoins and say, we need to stop this currency flight. And I wouldn't be surprised at all to see this happen. You see high uses of stablecoins in many of these countries with double-digit inflation. And, again, great from a moral perspective. But if you put yourselves in the shoes of the finance minister, less good. And I think they're going to push back on that. And that's probably going to be a story this year.
And if that comes to fruition, and we don't need to get technical here or too far in the weeds, how might they do that? Because I think a novice in crypto would go, again, this is decentralized. If I want to access stable coins, I want to have a bank on my phone in my pocket. I can do that. So just at a high level, how might countries push back on this?
It's going to really be hard unless you have sort of like a great internet, great firewall style situation. It's going to be hard to stop it. You can make it illegal. You can prosecute it. You can raise negative attention to it. You can create government rules that say you're limited to do these things. But practically on the internet, it's hard. It's hard to really fully clamp down on it. So I suspect the flight will continue, but I suspect you'll see countries try to clamp down on it and therefore sort of adding a new narrative to the stablecoin narrative of great for the US, great for the people of these countries, but challenging for some of those countries specifically.
All right, your seventh prediction, I've got to tell you, this really caught my attention as well, because you're using the term ETFs 2.0. And so the prediction is that on-chain vaults, AKA ETFs 2.0, will double in assets under management. And I will be honest with you, as much as I like to think I know a lot about crypto, I wasn't that familiar with these. So do you want to explain what on-chain vaults are?
Yeah, I think it's arguably the future of asset management. That's why we use the term ETFs 2.0. You and I remember when people were skeptical of ETFs and didn't know what they were, and now look at them today, $30 trillion and growing. So what an on-chain vault is essentially a dematerialized asset manager. What do I mean by that? If a firm like Bitwise sets up a vault, we set up IP that directs where investment goes, then you as an investor can choose to deposit dollars in the form of stablecoins into our vault, and it will be automatically invested to achieve a certain investment objective. Let's say we're trying to achieve a level of yield, 6 or 7%, and the terms of our vault are that we do it by investing in XYZ DeFi strategy or XYZ lending strategy, or we diversify across asset management pools, or we provide liquidity, whatever the terms of that investment structure are, they're in the vault. And then it allows you to benefit for that. We as a vault curator is the cute term that crypto use. As a vault curator, will earn a fee from that the same way we would from a traditional mutual fund. But the process is automated and we don't take custody of those assets. So again, dematerialized asset management. One of my big picture views as a person is that people always have thought that asset management has reached the end of innovation, right? They thought that when it was all closed-end funds, and then it was open-end mutual funds, and then it was ETFs, and then there was the direct indexing tangent. And I see on-chain vaults as sort of the next area of growth. And I think you're going to see, not this year, but in a couple of years, every major asset manager moving into this space. Right? It just seems natural to me. If we're going to a world of tokenized assets, why are asset managers having the same custodial role as they have in the past? Why are they having the same trading role? Can't that be automated through smart contracts? That's what vaults are. And I think they're early, but they're going to be an increasingly big deal over the next 5 years.
So just to put this in layman's terms, can I call these decentralized, on-chain, separately managed accounts? I mean, is that a good way to think about them just at a high level?
Perfect. Okay. Yeah, that's a perfect description. And compared to traditional structures, they're relatively low cost to spin up. Like any emerging area, there will be high quality providers and low quality providers. There will be blowups and huge successes. It will be messy. But this is like the early days. This is like thinking about DeFi when there were the first early protocols. That's where vaults are. But I do think it's a substantial growth area.
Yeah, and as you know, just like with the ETF market, money will flow to where it's treated best. So as you have those competitive dynamics, you have blow-ups, people figure this out, money will find a home where it's going to be treated the best. So that's interesting. All right, a few more predictions here. First, you say that Ethereum and Solana will set new all-time highs, but there's a caveat here. You said if the Clarity Act passes. So we talked about Bitcoin potentially setting new all-time highs earlier. Talk about Ethereum and Solana and why the Clarity Act is so important here.
Yeah, so the Clarity Act is the basic market structure bill that's working its way through Congress that would define who manages or regulates crypto assets. It's the SEC, is it the CFTC? Also define the core parameters around how DeFi exists and provide a firm regulatory framework for things like tokenization. Why does this matter? And how does it tie into that prediction? The answer to that is right now, the pro-crypto regulatory tilt outside of stablecoins is built on a foundation of sand, right? It's built on the fact that we have Paul Atkins leading the SEC. It's built on the fact that we have pro-crypto regulators at the CFTC and at the OCC. All of these could change in a different administration. The reason that we caveated this prediction is if we don't see the Clarity Act pass now, and then we have to wait for the November elections, right? And what will Congress look like? It could be 3 or 4 years before we get legislative strength for the tokenization and DeFi industries to really build. I think if it passes, it's all guns blazing. We're already seeing Wall Street want to move aggressively into this space. If there's a firm regulatory framework that's embedded in legislation that can't reverse at the flip of a switch, then I think those assets are massively undervalued. I described the Clarity Act to someone as the Puxatawny Phil of crypto. If it passes, I think it's summer and we're off to the races. If it doesn't go through, I think we see our shadow, and assets like Ethereum and Solana could see some sideways chop as people figure out what it means that the regulatory firmament is not as firm as maybe we hope it is.
So I have to ask you then, what's your expectation on whether the Clarity Act will pass? If you had a guess.
I think it's like something like a toss-up. There's a lot of hope in Washington. David Sachs, the crypto czar, has said we're closer than ever. There's an expectation that it will come out of markup in the Senate on January 15th. But there's also some skepticism out there, and politics is hard. I'm not saying that ETH and Solana won't go to new all-time highs unless it happens. It's a positively oriented prediction. If it happens, I think they have this huge catalyst that certainly pushes them. If it doesn't happen, we'll see. But the answer to will it pass, I honestly think it's about a toss-up thing.
Yeah, I've learned over the last several years, and once again, you know better than I, trying to handicap what happens on the political side or the regulatory side is 100% a fool's errand. So I'm
Forget
not going to get in that game either.
it.
All right, two more predictions here. Prediction number 9 is that half of Ivy League endowments will invest in crypto, which I feel like this just gets back into what we were talking about with institutional adoption, right?
Yeah, absolutely. And 2 already have Harvard and Brown. There are 8 Ivy Leagues. I had to look that up. I didn't know. But we think 2 more will. The reason this prediction matters is, as you know, Ivy Leagues are sort of the canary in the institutional coal mine. The reason hedge funds became a big deal was because David Swenson at Yale built the institutional model and the endowment model with hedge funds and private investments at the core of that. So they're often the leading edge of institutional adoption. Again, it's really notable that Harvard's largest liquid position is a Bitcoin ETF. That's an incredible fact. Harvard is at the forefront of this institutional endowment community. I think if we see a majority or at least half invest, it tells you that Bitcoin and crypto is really going mainstream and it's going to accelerate it. So again, 2 down, 2 to go. I think it'll happen this year. I feel pretty good about this prediction.
Okay, and then if we had a drum roll here, I would, sounder, I would use it here. But your last prediction, this actually takes us back to ETF land. So this is a perfect way for us to close. And the prediction is that you see more than 100 crypto-linked ETFs launching in the US. You are calling this ETF Palooza. And I'm actually wondering if you're understating this one a little bit, because there's something like 130 crypto ETF filings with the SEC. That'll obviously grow. But I'll just have you talk more about this ETF festival that you're predicting this year.
Yeah, you're absolutely right. There are more than 100 already registered. This one's in the bag. The ETF industry, innovates like nothing else. They will always try firing, what does Balchunas call it, spaghetti against the wall to see what sticks. And crypto is a hot area. And now we have generic listing standards. And you're going to see just an explosion here. To borrow from ETF history, maybe crypto people don't know this, but ETFs had a moment where they went to generic listing standards. For a long time, every ETF application had to be approved individually. And then the SEC passed something called the ETF rule. And suddenly you could see generic listing standards for traditional ETFs, and the pace of launches tripled, right? So it became easier, so more people did it. The same thing is true here. The SEC has made it very easy to launch most crypto ETFs. This could be 200, I think, as easily as it could be 100. You're going to see a lot of ETF launches. Not all of them will succeed. Many of them people shouldn't invest in, but the ETF industry is going to try, and there will be some gems in there, some real breakthrough ETFs that I think will be really significant.
It was funny. I was talking to our good industry friend, Todd Rosenbluth, earlier this week, and I was telling him, I don't know how I'm going to keep track of all these ETFs coming to market. You know that I like to have fun with this. I'm out on X and track all the new products. I can't keep up with it on the crypto side. And then I was telling him, for ETF industry folks, we have this multi-share class structure. So we're going to have a bunch of asset managers launching ETF share classes of existing mutual funds. I think I might just throw my hands in the air and say, you know what, I'm not going to stay on top of all this, but it's kind of my job. So I don't know. We'll see how we do it. Hey, real quick before I let you go, I actually saw, and you had this, I feel like it was in fine print at the end of your write-up. It was a little bonus prediction, and it's related here on the ETF side. You said that you believe Bitwise will launch the #1 ETF of 2026 by inflows. So I'll just ask you, can you tell us what that is, or is that going to be a surprise for all of us?
Oh, that's going to have to be a surprise. I'm not going to give that away to the competition, but we're working on some very exciting things, and yeah, I can't wait to bring them to market. So
See, that tells you I read the entire report. I read every word of it. So you try to hide that at the end there.
Look, there is still green space in the crypto ETP market. There's some big categories to cover. So stay tuned. Stay tuned.
Well, Matt, always so much fun. I can't wait to see how all of this plays out in 2026. We will have to grade your predictions at the end of the year. So maybe come back on here, and I'm sure you're gonna grade out very well. But as always, thank you so much for joining me.
Thanks for having me. This was a lot of fun.
That was Matt Hougan, Chief Investment Officer at Bitwise. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.